Okay, so Accenture just dropped their latest earnings report, and yeah, the numbers look pretty good. But honestly, the real story, the thing that everyone's talking about, is their massive all-in bet on AI. So in this explainer, we're going to break down how AI is becoming the absolute core of their growth engine.
And right from the top, you can hear the confidence from CEO Julie Sweet. I mean, can you blame her? Raking in almost $21 billion in new business and hitting the high end of your own forecast? Well, that's not just good news. That's a huge signal that whatever they're doing, it's working. The market's buying it.
All right, here's what we've got on deck for you. We'll kick things off with their strong start, then jump into the Q1 scorecard. After that, we'll dive into the AI growth engine. That's the juicy part. Then a quick look inside the business, and we'll wrap up with what's next for their fiscal year.
First up, Accenture's strong start. So what's the big headline here? The big takeaway? Well, in a word, strong. Really strong.
But you know, strong is just a word. How strong are we really talking about? Let's get into it. Let's check the scorecard.
Okay, the Q1 scorecard. Let's go by the numbers. What are the key metrics that really tell the story of this quarter for Accenture? First off, total revenues, a cool $18.7 billion. Now, you might see a 6% increase and think, meh, that's okay. But here's the kicker. That number was at the very top of what they predicted. And for investors, that's huge. It shows that management knows exactly what they're doing and they can deliver.
But this is where it gets really interesting. New bookings. We're talking $20.9 billion. That's a 12% jump. Think about it. That's future revenue already locked in. It tells you that demand for what they're selling isn't just stable, it's actually accelerating. Pretty impressive.
And look, it's not just about the money coming in the door, right? It's about how profitable they are. They saw a 10% pop in adjusted earnings per share. That's a really strong sign that the business is getting more efficient. But wait a sec. What exactly is adjusted EPS?
Yeah, let's just clear this up real quick. Adjusted basically means they take out any weird one-time expenses, like a big restructuring cost or something. It gives you a much clearer picture of how the actual core business is performing. So that 10% growth, that's the real deal. It's a solid look at their fundamental strength.
Okay, so the overall picture is solid, right? The financials look good, but now we get to the core story, the thing that's really driving all this excitement. It's all about AI. This is the growth engine we really have to unpack.
Whoa, just look at that number for a second. 120% growth, year over year. That's not just growth, that's an explosion. Pulling in $1.1 billion from advanced AI in a single quarter? This tells you everything. AI isn't some little experiment on the side anymore. It's becoming central to their entire business.
And this isn't a one-off. The momentum is clearly building. They booked another 2.2 times billion dollars in new AI projects. So that crazy revenue growth, it's not a fluke. It shows that companies are done just playing around with AI. They're signing big checks for real, large-scale projects. And this quote really nails it. The demand for AI is both real and rapidly maturing. We're officially past the hype cycle, The phase of tiny little pilot projects is over. The demand is maturing, and clients are putting serious money into huge AI solutions that actually impact their bottom line.
So how are they pulling this off so fast? What's the secret sauce? Well, they're not trying to build every single piece of AI themselves. No way. Their strategy is way smarter. They're becoming like the central nervous system for the entire AI ecosystem. Think about it. They're partnering with all the heavy hitters, OpenAI, NVIDIA, Anthropic, Databricks, Snowflake, Palantir, and positioning themselves as the one company that can pull it all together for a big client. They're the integrators, the ones who make it all work.
Okay, so this AI story is obviously huge. But let's zoom out for a second. Where does all this AI growth fit into Accenture's wider global business? Let's take a quick look inside. All right, check this out. When you break down their revenue by industry, you see a huge strength. They're super diversified. Yeah, products is the biggest slice of the pie at $5.7 billion, but look at how much they're doing in health, financial services, tech. They're not just betting on one horse. That kind of spread gives them a ton of stability, especially when the economy gets a little shaky. And when you look at the map, man, they are a global powerhouse, no question. The Americas is the giant, pulling in over $9 billion. But Europe, Middle East, and Africa, what they call EMEA, is right behind them with almost $7 billion. And get this, the Asia-Pacific region was actually the fastest growing this quarter, up a solid 9%.
All right, so Q1 was a definite win. But what does a strong start like this mean for the rest of the year? Let's take a look at what Accenture itself is forecasting.
So this is their official guidance for the whole fiscal year. And what you see here is a picture of steady, sustainable growth and really solid profitability. But the number I want you to focus on is free cash flow. They're projecting between 9.8 and 10.5 billion dollars. That is a ton of cash, and that's the fuel that's going to let them keep pouring money into their AI strategy and stay ahead of the game.
So really, it all boils down to this one big question. Accenture is making a huge bet that they can be the essential reinvention partner for every company trying to figure out AI. They want to weave this tech into everything their clients do. And look, they built some incredible momentum right out of the gate. But the real question is, as this AI revolution gets faster and faster, can they keep up this pace? Or better yet, can they stay out in front and lead the whole pack?